So we can get to some charts here. Shit, I'm saying wrong screen. What screen do you guys see?
Hang on, I'm gonna put this on my TV.
I can see.
Yeah, but is it the chart?
Yeah, I see the chart.
Oh, okay. Wasn't sure.
I see the chart too. I just want to enlarge it on my TV.
So we're gonna look at the dollar index. This is where it all starts, with the dollar index and Forex Factory. So first, we're gonna actually start with. This is how it's how you start. You don't just go in, look at it, take a trade. We sit back on our Sundays and we look at the week ahead of us. And like I see already, my first red folder isn't until 3:15 tonight, right? That's the euro, and we know what's going on in Europe now. They're already in recession. Look left to get right, right? It's the same way when COVID was happening, we looked left at the Asia, saw what was coming ahead. We look left to get right. So same thing with trading, same thing with going on in the world. We see the recession happening over there, and it circulates downstream to here. So we're paying a lot of attention to what's happening in Asia and Europe. Particularly with these red and orange folders. But I spend a lot of time looking mostly at US. So what I want to look at is this first red US folder, which is the Flash Services PMI. As you can see, most of the year that's been negative, right? Except for, I remember this last one that came out September 23rd. Wow, time's flying too. That was the first one that was actually positive. But if I looked at the chart, I'd have to see what actually happened on that day, September 23rd. So we see the level of diffusion index based on surveyed purchasing managers and services industry. So if we have the actuals greater than the forecast, that means it's going to be good. But if I look at probabilities wise, I'm already going to be expecting a probability of it being less than good, being a red day, because that's what I look back at, when I look back.
So basically when we go here, right, all the pairs, they have like red days and stuff. That means that we will be only looking for sell.
Oh, they have what, red days, you said?
I mean, because I feel like they have red portfolio and yellow portfolio kind of looking thing.
Yeah. I mean, you can, if you're really, I mean, I have economics, me and Phil, we both major economics, so we understand this stuff on a deeper level, but it might not have that much effect on the actual markets. You know what I mean? So if like,
I got it.
Whereas the red folders, they're actually going to have a greater effect on the actual markets. You understand?
What do the red folder means?
The red folders are high impact news events, such as federal, FOMC meetings, non-farmers payroll, flash services PMIs. So PMI purchasing. I'm pretty sure it's PMI is a purchasing managers index, right? So what it measures the diffusion index based on surveyed purchasing managers in the services industry, right? So above 50 indicates that the industry expansion, right? And below indicates contraction. All of our forecasts have so far in the past 2 months have forecast contractions and have had previous contractions. So what does that tell you? The market has been contracting. So what is a high probability is that even though we actually had a higher than forecast, it was still a contraction because why? It was below 50, right? So when it comes to probability, we looked at the high probability play is that it's going to be a contraction, right? That we're going to have. Now we don't right now look at the forecast. The forecast is already contraction because it's 49.6.
Does that mean that we have to wait for like basically, once we go past 50, above 50, we should be expecting a breakout of the contraction?
Yeah. So I won't even take a trade until after this news event comes out, right? Because I know some people trade Sunday night. but I'm gonna sit like I'm managing guys' accounts. Like I'm not even gonna take a trade until after I know what if this PMI, right, is
Right.
actually greater than. I hope it is. I hope we do have a 49.7 because what was that? What would that mean? If we have a 49.7, that means we're almost at 50 and that we're almost towards expansion and then the
Expansion
economy is starting to recover. But right now, it's high probability is going to be, like I said, somewhere at the forecast or below her, which would mean negative, which would then continue to drop this dollar. As you can see on the dollar index, we're now starting to go. We've rejected these price points, swept liquidity here, and it went bearish. So if the dollar is now, it's been going bullish for so long, but now we're seeing it's been rejected so many times at this level and failing to go up. Now we're starting to see rejection resistance. So we can expect to see maybe the dollar, maybe the report comes out as good, right? And then all of a sudden now we drop down to, a 4-hour. Because what happened here, I can show you what happened. We had liquidity being run here. So we had the buy side liquidity. So we had buy side liquidity just being rerun again, just like here. Buy side liquidity was, let me drop to an hourly actually, so this makes more sense. So buy side liquidity here, right? This is how the algorithms work. Don't let anyone tell you anything different. I talk to people at Bank of America and I show them this and they don't even know what the fuck I'm talking about. Because I tell them like, oh, the bank, everything works off algorithms. And then this financial advisor, he told me about some book, about value investing, because that's all he knows. He wants to sound smarter, but when he really just doesn't know. So all he can do is say, oh, like read this book, like I'll read the book, but that doesn't change the fact that the algorithm, the markets are moving off this algorithm. You know what I mean? But yeah, I noticed that he was like, he gave me his book. I'm like, bro, I don't need your fucking book. This here liquidity is being run, right? So what I tell people about Judas swing, right? Like Judas, you guys know about the Bible, Judas.
Yeah.
The one that stabbed Jesus in the back. I said at the time, like, Judas will stab you in the front, then the back. You're gonna see the stab in the front first, and then you won't see the one in the back. But this is it in trading, right? This is Judas swing because what is it doing? It swept this what got swept first? I have to drop down lower to see what got swept first.
Yeah, I see that in the chart
Yeah.
all the time.
So sell side got swept first, right? And what I tell people is usually what I've noticed, if you look at my YouTube videos, like 9 times out of 10, the side of liquidity that gets swept first is the initial direction, right? Because why? It's reverse psychology. It's Judas swing. We're going to sweep you and stab you in the front first, then stab you in the back. So with this here,
how do you avoid that though?
How do you avoid it? You don't. Sometimes you sit on the market, you sit on the sides. You can't trade every single move, right? So I wouldn't. I know how to trade this because like I said, I've created my own strategy that makes that I can trade with no indicators. Everything.
I see that in the market. I see that on the chart a lot of times.
And did you guys watch all my YouTube videos?
I watch almost basically 80% of them.
Okay. So then you can understand how I can trade without any indicators. You can see I don't use any indicators. This is naked trading, right? So if I saw that this liquidity here, the sell side liquidity, all sell side liquidity is going to be red, all buy side liquidity is going to be green, right? So if I see that this liquidity is being run first, right, with this here institutional candle, I already know all I have to do is drop. I like to play off the 15-minute candles, right? This is how I get in without any indicators or anything, right? So yes. So you asked how would I play this? Well, one, we're timing the market, right? Or time and price. So what time did this happen? 7:30, right? 7:30, and but OTE is at 9:30 anyway, right? So you shouldn't even want to be trading this anyway. But if you're good enough to trade it, this is how you would trade it. After you see this institutional candle now on a 15-minute that swept the liquidity. What we would want to do is we would want to place a buy order that automatically enters you in as soon as price closes above this last bearish candle that made that.
Maybe a buy stop then that we will set up there.
Yeah, so you would put it like right about here. Be your I usually have about 80 pip stop loss on this 30. So it'd be about here. And then you would target this here liquidity, right? This liquidity pool. They say my take profit is your still stop, your stop loss. So these are people's stop losses up here, right? Yeah, because they took sales right here. So a lot of retail traders that take take sells off these double tops, right? That are waiting for those big moves that didn't take profit when they should have. They got taken out by this. This is their buy side liquidity, right? So boom, my take profit is their stop loss, right? So boom, that would have been a nice, what, 7% return? Just off price action alone. I don't know anyone else teaching this because I created this off of just looking at 15-minute candles. And this is just the dollar, right? This is me using price action alone with manipulation and time. But this is
when you do this, you're going based on the overall direction of the market. I mean, in the higher time frame, or you just do it,
well,
as a kind of trade, or I mean,
on the overall. No, remember, I understand that two things. I understand the market is. I'll write it out. I understand two core concepts. Oops. Understand one, market makers move. The market makers draw in liquidity, right? I call it searching.
Market makers do what?
Market makers draw on liquidity, other people's stop losses, right? Because that's what they have to do. That's what the job is to do, to rebalance the market.
The stop losses, right? Like,
yes,
the stop losses where they basically are saying, hey, if shit hits the fan, this is where I want you to stop at.
No. So what market makers are drawing liquidity because they have to liquidate buy and sell orders. For every buyer there has to be a seller, right? There's something called the OMS, the order management system, which matches every buy order with a sell order, right? But sometimes there's inefficiencies in the market that are created, right? But so every buy, this is inefficiency created, right? Look at this long candle, right? And I'm going to show you how inefficiency was created here. It's called an imbalance or a fair value gap, whatever you want to call it, imbalance, disequilibrium, whatever. It's an inefficiency in the market because it's a 3-candle move, right? Between this candle's wick right here, and this wick, and it's a 3-candle move. So 1 candle, 2 candle, 3 candle. So the 3rd candle's wick. All this volume, all this buy pressure in between, that's all this equilibrium imbalance. So we caught that imbalance. We were able to capitalize off the inefficiency on the way up, right? And this is a very advanced trade to take, right? One, because not many people are trading at 8:30 for pre-New York Open or understand, what's really happening, on the dollar at that time. But you know, one thing you might be able to catch, the easier trade would be the second one, right? The second part of Judah's swing would be the sell, right? Because remember I said it's usually going to go in the direction where it went in the first place. That's how they reverse psychology you. That's how people, you know, they're like, oh, I bought and sold and still lost, right? They know that. They know they can sweep the buy side, they can sweep sell side, right? Pump the market up, sweep buy side, and then reverse it back again, right? So this is why a lot of people lose, because they don't understand that it's just manipulating the market on both ends of the market. So we could actually use the same strategy and easier to capitalize on the sell, right? So after we had this long institutional candle, we created this here imbalance right in this gap, right? So I usually will mark this off, right, like this. So this is all, yeah, this blue zone. So I know that this has to be filled in, right? This is even more confirmation now. This is why this is a better trade than this one, because we have more to work with. We have liquidity, institutional candle, sweep, now imbalance, because the market is also drawn to inefficiencies in the market, right? Market drawn to inefficient. I don't know how to spell it today. Market drawn to inefficient points, right? So that's inefficient price action, right? Well, IPA, because there is disequilibrium there, right? So the market's going to be drawn to that, and since we understand that, market shoots up, sweep the buy side liquidity, closes here, candle opens here, comes down, gets rejects off of this fair value gap, right? Comes up. Why? It wants to create more sell side liquidity, right? Because there are people going to be like, oh, it's a break and retest, right? Nice support and resistance, right? Because technically, yeah, you could say that this was just a little like nice break and retest, right? So what they're really doing is they're setting you up again. That's more sell side liquidity there, right? With the break and retest, right? But we don't do break. I don't break and retest trader. That's not me. I understand what's really moving it. So I understand that this is just liquidity, right? Sell side liquidity. So what we want to do is, after we see this bearish candle, once we get a close below it, once we get a bearish candle close below it, which happened here, then we start looking for sells, right? So what happens is there's another we had some of this fair value gap was already closed in, right? Because it went down there. But we know that we still have more to go, right? But there was also another fair value gap, if I zoom in, that was created here. Right? Oh, look how detailed this is. So if I drop down to a 5 minute, gonna get scary accurate here. That's how you know you're working with computers and not real buying and selling pressure, right? This is proof. So now we had that inefficiency there, right? And guess what? Came up, rejected this minor level of support resistance, and literally to the T, off the 50% of this imbalance range is where you would have entered your short at 10:30, right? With a small stop loss. Targeting this here sell side liquidity, this last point of the sell side liquidity. That would have been a target here. That's a nice 1 to 5 risk reward trade, right? Like, yeah, it could have get more, but this is how you don't want to get greedy and stay in this, because look what happened. It then reversed easily, right? It created this here supply zone with this last push down, right? Then so it created this here supply zone, and then it broke above this here structure point, right? Because this was our last lower high. This was our last lower high, right? Right there. So once it broke above that, I know that momentum shifted. Momentum shifting right this way. So once it broke above that, I was just waiting for it to come. You're just gonna wait for it to come back into your demand zone, right? Supply over demand. So we have supply up here, demand down here, right? So you're selling and supply, you're buying and demand, right? So now we see the shift. So now you're just gonna, now we've already took the sell, right? Now we've took the buy up, took the sell for the initial. Now shifting the market back the other way off 50% of this range, right? So it shifted up, came back down, rejected, came up, boom, rejected right at this 50%. That's where you would enter for that reaccumulation. Put the stop loss here, right? A little bit below the last point. Just give yourself some space. And then now look, we're doing the target here. This is our last mitigation point, where it was the last up move before the push down. So that would be our take profit up in here for a nice another 5%. So that's 5% here, 5% here, 7% here, all in a matter of $19. That's 12% in 19 hours of 3 trades. And that's the gist of it. And the market's going to keep doing this over and over. It's going to keep creating sell side liquidity. So we had that sell side liquidity there. Remember that was taken out, creating more sell side liquidity. That gets taken out right here, right? Because we didn't even get to the sell yet, right? Remember I said the initial direction is where it's going to go, right? Okay, so look, this was the actual play. The next day, when it mitigated out of this last, this is how you see equilibrium, right? When it comes back up to the point where we had our last big move up, this is our last big push up for the down move. That's why I know that once price comes to equilibrium here, we can expect another big mitigation, right? Because they're in drawdown, right? They're buying up positions, keeping those open positions, selling the market down, but they have to mitigate out of those buys by selling out of it, which is why if I were to take our range of this, right? Push that out. Boom. How accurate is that? So and that's why, these people at Bank of America, they tell me, oh, read this book, read this book, because they don't even know. They don't know what else. That's all they know is what was in the book they were taught. They don't know anything about algorithms. You know what I mean? All they can tell people is, oh, read about value investing. I don't need to read about value investing if I know that's like saying, okay, I need to go read about Buddhism or something if I believe in Christianity, what I mean, or something like other than that. I personally believe in the universe. I don't really follow to any religion. I believe that all religions are the same in some point in nuances. Muslim, Buddhism, and
they'll bring the same God at the end of the
Christian, but me personally, I just don't need religion at all. I move off of energy, right? And the energy is created or destroyed, and I move off of people are giving me positive energy or bad energy, right? So that's why I say don't like Bank of America, whatever these people, they just because they're they're in their little office, that doesn't mean they know truth about everything. I know that these markets are targeting this sell side liquidity, right? I know that for a fact because look, it keeps happening over and over again. Taken out right here, more sell side liquidity taken out. Now we can look at the upside, buy side liquidity as well, right? Look at buy side liquidity here. Buy side liquidity here. taken out. Um, So when you have this type of information, you won't have to really pay too much.
You can do this in the higher time frames too.
Well, look at the higher time frames. Well, you
Can you
can't.
do this in the higher time frame?
Well, yeah. I mean, when I look at fair value gaps and things, here I'll show you something off a higher time frame. I'll show you a beautiful higher time frame trade. This is a daily.
Trade the higher time frame?
Yes, here I took this short on Bitcoin here.
Okay,
So this is a fair value gap right here, right? Between this,
right.
this candle. That was created, right?
It seems a lot more clear.
So the 50 came right back into the 50% of this fair value gap. And what happened?
Yeah, it collapsed.
It dropped for 10% over 4,000 points, right? And that was September 13th, right? And then now what's happening? Bitcoin is just accumulating, right? Accumulating off of a monthly fair value gap. Now I can go to an even bigger time frame and show you. It's accumulating off of a monthly fair value gap here, off of this monthly time frame. So we have we have a fair value gap in between this.
So you don't trade that, you wait until the break out of that?
I would wait for this to get filled. I'd wait for Bitcoin to go to 13,864. And then at that point, I want to start buying some more Bitcoin around this bottom of this fair value gap. Because why? It hasn't been filled yet, right? This fair value gap, there's a fair value gap between here, this 3 candle move play, right? This being 1, 2, and this is the 3rd candle. So we have a gap between this wick and this wick, creating this fair value gap.
So you want price to break below and hit the.
I would buy off at least the 50%, right? So let's say it'd be off this 15,758 level, right? Because if I go, it may not completely fit 100%. It might only fill it 50%, right? So that'd be a fair price point to wait on, right? So what I can do is I can set an alarm right above it for Bitcoin, and once it passes, I'm like, oh, okay. Let me go on my app and purchase some Bitcoin. And remember, we're purchasing Bitcoin as equity, so we don't even need a stop loss, right? We're just going whatever you're and we're gonna hold it where, because eventually it's gonna take out this, and we're gonna get a 37% return on it, right? So if we right now we invest, say we put $1,000 into Bitcoin, we're gonna get at least 37% off of that. That'll be $370, which it's not bad. 37% is huge. So it's gonna eventually take out this high, right? It's all-time high of 68,000, because I know we're gonna see Bitcoin to the 6 figures. Because why? Look at what's going on. Like I said, and I work in regulation, so I know a lot of this stuff. I pay a lot of close attention to what's going on. Look, comes right up. CBOE, which is the Chicago Board of Options Exchange. Platform has been purpose built with an exchange on bare metal. So let's see what they're doing. So see, they're all now aiming to bring in digital assets, right? And it's all perfectly aligning with what we're seeing, right? The technicals are all perfectly aligning with what they're doing, and they're not the only ones. There's a ton of them. I can show you. Who else we have? Credit Suisse. They're one of them. They're a client of mine, right? They're all singing the same thing. They're all singing the same song. You look at what they're doing. Let's see. I know there was something about them. And I only know this because I work in the industry with all these people. So so it's all about custody, right? It's all about holding custody. And this come from the top up people I hang out and I go to lunch with, like I hang out with global regulatory affairs, you know what I mean? Head of global regulatory affairs. So this information is coming from them. I see it right here. You can, if you open your eyes, you'll see it. Credit Suisse, MasterCard. Right. Is there anyone that was paying attention to this?
Mhm.
There we go. MasterCard. MasterCard pushes deeper into crypto with a new tool for combating fraud. Oh, this is one we were looking for. MasterCard will help banks offer cryptocurrency trading. So remember when I was at Bank of America in 2017, 2018, what were they all saying about crypto then? Oh no, it's just a fad, it's gonna pass Bitcoin this, Bitcoin's bad. Now what? You can't beat them, join them. Now all the banks, they're joining hands, locking hands. They want to, remember everything that was once legal, that was once illegal, the government regulated and got money off it. Marijuana, right? Shit, slavery, fuck, modern day prison system, like all these things, alcohol, and now crypto. It's all the same shit, just boxed differently. That's why regulation is taking so long. Why? Because the Federal Reserve has to have they have to get their side because they're creating what? They're getting the digital asset, right? The Federal Reserve digital asset. So this is why, we gotta, take so long to do this.
Y'all onto something.
Huh?
So y'all onto something.
Oh yeah, the Federal Reserve, they're the one that created the blockchain.
See, I'm out of the loop. I'm not even.
And they won't do that. And I know that personally from my mentor who enlightened me that the Federal Reserve created the blockchain and they want you to think is some random person, Satoshi, whatever, that could be a front. Shit. But no, look, now MasterCard will help banks offer cryptocurrencies. Credit Suisse, CBOE. CBOE aims to launch margin-based crypto futures. So this is why I know, all right, BlackRock. Sometimes they use cryptocurrency, sometimes they
BlackRock?
Yes.
Oh wow.
As soon as I saw they were the first one that I noticed. As soon as I saw BlackRock was investing institutional assets into crypto, I said, oh, something's about to happen. Bitcoin's about to go to 6 figures. And everything is aligning, right? And so just remember who you heard it from here first. Plus, plan another. Launches a Bitcoin trust. Here's the one. That's the one. August is around when I first saw it. So it's about they launched their Bitcoin trust. So what does that mean? Bitcoin is going to skyrocket because they have too much money. So now is around the time where you should be buying up these assets right now because it's it's coming. The digital change, the digital reset, the restructuring of our financial system, it's all coming at once. It's all aligning. I can see it in charts. It's all aligning. So this is when we're going to see that buy side liquidity. So we're going to see that buy side liquidity get swept. And they're going to make fortunes. And they're liquidating all those people that were buying here, right? Liquidating all them, getting them to sell back to them at a lower price, push Bitcoin back up, and we'll see 7 figures into Bitcoin. Not just Bitcoin, it all looks the same, right?
All crypto assets are in the same chart.
Ripple, they're all gonna be the same. Ethereum, yeah. So get in now. The best thing you can do is start scaling positions. So all right, boom, get some positions here, get some positions here, get some positions here, and then on the way up, getting more positions secured on. I would stay away from the Doge coins and the meme coins. Maybe Dogecoin could, but you know, it could.
How about
But
Shiba?
it has, it's risky though, but the percentage increase on this would be ridiculous. Though, if it does, so
How about
maybe
what do you think about Shiba?
Shiba.
Mm-hmm.
I mean, it's pretty much the same thing as, you know, Doge, you know, the meme coins. How, like, do you want to, you know, be that risky? You could, but remember, they're all singing the same song. Cardano,
Yeah, because when Bitcoin started taking off, I think they're all going.
because they want you to they want people to take their eyes off it and sell to them, liquidate paper hands. But no, hold and buy more. Look at the ruble. Shit, this is the Russian ruble. I was looking at that. Yeah, the ruble, it tanked. And then in March when the war started, but then ever since the war, remember we thought we hurt Russia? And then ever since they bounced back from that, the ruble's been going back up to prices above it's been in, since 2018, or since it's been in 2015, right? I look at all this. But yeah, you guys have any? Oh, who else was it? Yeah, BlackRock. I feel like I'm forgetting someone. BNY Mellon. BNY Mellon launches for digital. It's all about having custody, right? They want to take custody of these assets. See, it said client demand led custody. So everyone's changing up now. Everyone, they can't beat them, join them. So get into these digital assets now while the time is right. You know what I mean? We can always buy the stocks later. I mean, shit, buy some stocks too, because the market's down on stocks too. You know, look at you know, we could buy up the Dow, right? We could buy up the Dow. We could buy up the ETFs on SPY. All this shit is on flash sale right now. German, same thing. Looks the same. The German bond, the German market, the UK market. They're all singing the same tune. These futures. So everything is, you know, like I said, these recessions and everything, these are all cyclical. Like, if you're gonna tell me that the dollar just happened by chance to do this, then, and that just by chance these resistance levels are just randomly perfectly even here, you know, that's fine. You know, but I know how the market moves. I know that the market the dollar rejected this 50% supply zone for a reason. I know that it's not randomly being pushed up. I know who's behind being pushed up, and it's not Joe's Pizza increasing his slices by 50 cents. So what's really pushing this up and why? You know, what's the only way that we can pay our taxes? What's the only legal form of paying our taxes? The dollar, right? So you got to think about those things. You know, there's other forms of currency out there that could disrupt that. So pay attention to these things. It's rejecting that 50% of that on the dollar.
You think it's going to happen? So you think the dollar is getting ready for a reversal?
Well, like I said, the central bank is creating their own digital reserve, so they've pumped up the market enough since, you know, I think it started in June, where they remember when the vaccine came out, and they're like, all right, well, I'm just gonna pump the dollar up, pump up, pump up, pump to literally.
It seems like it's creating a double trap there.
You're telling me it's just by chance to the T. It went to, and this is a daily time frame. This is a big time frame, just to the T.
Right.
The 50% of this supply zone. And remember, look when this supply zone was created. Yeah, look at the date on this supply zone, from the bottom of it to the top of it. The supply zone was created in 2001.
Yeah, so, I don't think it's going to go any higher than that.
No, I know, but think it's deeper than that. These are predetermined plays that have been set up. Look at this point. If we put both of these, if we look at 2001 when this was created around the .com, right? We look at 2008 creating this liquidity, right? 2008 and 2011 with that recession creating this liquidity. Now what? And from there, we had 2016 this liquidity here, and then 2020. What happened? We reached a peak around March. This peak right here of liquidity was when? Everyone remembers March 2020, right? All these points everyone remembers. July 2008, right? 2001, right? March 2020, recession came. I mean, the mini recession with COVID, right? Boom. Back into May of 2000, in June 2021, where we start to recover, right? Start to recover when we mitigated out of this here position, this last push down, right? It's all aligning together, right? By time and price. So now, all right, we're pumping up the dollar, pumping up the dollar, pumping up the dollar till we get to 50% of our supply zone, and then we can reverse it back down and capture all this liquidity. So predetermined price levels, proven. And we just want to ride the wave. How can we capitalize on knowing this information? We know the dollar's probably gonna, it's been rejected. Now it may now start to reverse. You know, what would that mean for, you know, other currencies, right? That means if the dollar's gonna get weaker,
All
then
currency pair
the dollar's getting,
are gonna start going higher.
yeah, and that we can already see that starting to happen. So now the GU is gonna continue to push up, right? And take out this, all this here liquidity. Yeah, that's it. It's pretty much everything. It's just,
The dollar is getting weaker, so what do we have to do?
what was that?
So now that the dollar is getting weaker, what do we have to do to like?
It's capitalized.
kinda-
Well, I trade. Like I said, I just told you, bro. Buy your Bitcoin, buy your stocks, capitalize on the market, and take your trades. Take your trades that we're trading, and from your profit, buy up the stocks, buy up the Bitcoin, and capitalize on the timings of it, because that's what they're doing. And so soon as they know this, they're capitalizing on it. So we have to capitalize on all this liquidity that's going to get run, right? That was created right here, right? You can't beat them. You just ride with the wave with them. You know, it's not. Yeah, it's about just riding the
I
wave.
can see a train line in there. And
Yeah, this is but it's all liquidity. You know, this is all liquidity points. Liquidity, 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 liquidity.
So you're
all
saying
the points are gonna. You start shorting the dollar now, looking for sales.
So that'll be the recession that they're talking about. With the dollar going down. Because remember what they do, they stopped rapidly increasing the interest rates now, right? So now we're gonna start seeing the other way, the other side of things. But I've only been really trading US 30 recently, and it's been working out.
I think everybody only trading US 30.
Because then it's been, well, I don't trade Forex anymore in general. I really only trade gold every now and then. If I don't see anything. Look, this is
Yeah, but I know that everybody's saying that they're only trading US 30 for now. So.
yeah, if they know how to, because not my friends. I know my friends that I trade with, they're awesome traders. They're profitable traders, but they don't trade US 30 because it's too volatile for some people, you know. So if you're trading US 30, you better be able to trade US 30 consistently. You know what I mean? Because I stayed away from it for a while. It's too volatile. There's a lot of people burning their accounts because they're trading an instrument they haven't backtested. I've backtested US 30 for any other thing. I can go back. I have notes to show you years of backtesting I've done. So I'm able to, but there's a lot of people out there that are trading this instrument that they shouldn't, that they're not ready. They haven't done the backtesting required. I can show you notebooks that I've done all years of backtesting in US 30.
Rental behavior or US 30, you mean that's a different behavior than all the other pairs?
I mean, it's just a lot more volatile and it's a lot more manipulative. Yeah, it's a lot more.
Right.
So you have to understand a lot of different ways it moves, you can see. But yeah, look at all these CBOE, Credit Suisse, MasterCard, BlackRock, BNY Mellon, everyone, you know, they want you to know. So touching more than 20% of the world's investable assets, BNY Mellon has the scale to reimagine financial markets through blockchain technology and digital assets, said CEO, President, BNY Mellon. We're excited to help drive the financial industry toward as we begin the next chapter. So what they want is they want the custody of these. They want all your guys' assets to rest inside these, you know, assets with them. With digital asset custody, we continue our journey of trust and innovation into the evolving digital asset space while embracing leading technology, collaborating with fintechs, CEO of securities and services, you know, so like remember, just how do I stop the recording?